Hey, everybody. How we doing? We are an hour into today's session, and it is already an interesting one. I'm looking at my screen right now, and I'm seeing the broad-based indexes going higher, but there are degrees of outperformance and underperformance. We're going to figure out what's going on underneath the surface here. Look at the S&Ps. We're going to look at the NASDAQ, the Russell. We're going to look at oil, Bitcoin. We got a lot to discuss. This is futures trading with NinjaTrader. Let's roll. All right, I've got Jim Cagnina with me here. Jim, Senior Education and Training Specialist for the NinjaTrader platform. Jim, how are we doing today?
I'm doing great. I'm excited. As a matter of fact, I'm so excited to be here today. I was a half an hour early.
I know. Well, we had a week off last week, so we have so many things to catch up on. Let's just start with the overall market. Let's bring your charts up on the screen here. And just start working through some setups here and then start looking for some trades. Because as I said, it is in the time we last did this show, a lot has changed.
Yeah, for sure. Let's just shoot through the stock index futures right now. I'm looking at the S&P 500 right now, and we had a pullback, right? We had a pullback. I don't like to use the word correction because I think the market's always correct, so it's weird to me. But we did have a pullback, and I'm going to put my crosshairs right here on what I'm going to call Omicron Friday, right, the day after Thanksgiving.
Okay, that's a good name for a day.
Omicron Friday, and literally since then, and I have a little chart here that shows the range, the daily range, which really shows off the volatility, the new kind of volatility we had as a result of this uncertainty, right? Markets don't like uncertainty, and you have a big reaction to the downside when it's potentially a negative uncertainty with more lockdowns and all that stuff. But we're talking 140 points. 81 points, 110 points, 153 points. And remember, in futures trading, each one of these points per contract is worth $50. So we're talking about a lot of risk and a lot of reward potential when you have these volatile days today right now. We've hit that 50% retracement on the S&P right now, and I think we're starting to crawl back up as this idea of Omicron maybe not as bad as we all thought.
All right, so this is the S&P. So what are you looking at for today?
So right now I'm slightly bullish right now in this market. I'm neutral though. I'm a little hesitant, a little more neutral to biased on the upside a little bit. I think we have potential up to this 23.6%. And if you just look at a daily chart, intraday day chart, and here we go. So here's kind of the value area. We've spiked through that after the open here. This was at the, I don't know, this is actually way after the open here, a good half hour after the open. We had some buyers come in pretty strong right now. We're trying to find a top. Once we find a top, we will be able to declare, hey, this is an area of resistance. But I don't think we're there yet. So I think we're still looking for areas to buy. Right now, I would be a patient buyer down here around 66.5. And I would put it in a micro environment today. And we're going to talk more about that as we go a little bit later.
Yeah, we will. Okay, so let's move on here. I got it. So you surprised me so far because I was wondering, Jim is always pretty bullish, but surely something must have changed here in the past couple of weeks. So far, not the case. That was the S&P, though. Let's look at the NASDAQ. Surely, Jim, you can't be as bullish on the NASDAQ.
No, I'm not. And
Okay.
Here's a NASDAQ daily chart, and you haven't seen that momentum back up yet. I mean, we have some pretty serious big red candles here, especially the previous session. You go back a couple sessions, and right now we're just kind of uncertain, right? This little tiny baby green candle's not really doing a lot. We're up about 20 handles, which isn't that big a deal on the NASDAQ. And I think we have a little bit of drag with the Tesla news.
Which Tesla? Wait, which Tesla news?
Well, I
So-
thought, I'm reading, I don't know if this is a big deal or not, if this is affecting things, but the SEC investigation with the solar panels.
oh, yeah. Okay, right. I saw that. That was from this morning. Right. Okay.
Yeah, and my gut reaction was, okay, this is going to maybe slow the roll on, a little bit in this particular stock index. We'll
Okay.
see. Time will tell. But we're holding our own right now. We're kind of stabilizing. And the volume is still pretty intense. 351,000 so far in the big size contract. The micro though, check this out, Spencer. 737,000 contracts already traded in the micro. It's incredible. It's more than 2 to 1.
What does that mean to you?
It means that it means that traders are really kind of grasping this idea that maybe you could be more successful by giving yourself more breadth between your profit target, your stop loss, and your entry, and you could kind of wait out these volatile moves a little bit better with the micros and not expose yourself to too much risk, yet maybe capture some of the upside in a real positive way. So, it's this is a very volatile stock index future, and the micros give folks a better chance of being successful, in my opinion.
All right, we'll get to that a little bit later in the show as well. Let's move it along here, Jim.
Okay, yeah.
Look at what the Russell. Is that what you want to get to next?
Yeah, Russell. Now this is large cap versus small cap, right? This is small cap stocks, right? And maybe they have less cash on hand. They're more sensitive to things like interest rates and the price of the dollar and those kind of things, as opposed to the large cap stocks who have deep pockets and have the ability to grow in this environment. So we're seeing here, there's no real retracement here. I'm kind of a bear in this market here, although I'm really hopeful we're finding some area of support here down around where my crosshair says, 2147-ish, give or take. But we'll see. Time will tell. I'm less optimistic about this particular stock index future right now.
I would certainly hope so. It's been a pretty tough year by and large for the Russell compared to the previous two. And then what else did you want to look at here, Jim?
I'm just going to shoot up the Dow Jones really quickly here.
Oh, yeah.
Look at that. I mean, we're up 588. And so this is another example of volatility. Things are moving in big chunks of time. You could just look at the size of these candles. They're really big in relationship to the previous kind of draw up and drawdown. So we'll see where this settles up right now, but we're kind of approaching that 50%. Right now, I feel like we should be closer up to the 61.8%. So I'm a tad bit bullish in this one.
Okay, so we just ran through the 4 major U.S. stock index futures markets. Jimmy, are there anyone that you have trades on right now, or if you're looking to put trades on, either on the long side or the short side?
Yeah, so on the long side, I'm looking at trying to get into an ES position on the long side.
Okay.
Right now, I have a really conservative entry around 45, 66 and a half. You can see by that blue label there on my chart. So that's a limit order to try to buy a contract. I'm going to probably get more aggressive as time goes on to try to get into a position. And I've identified these highs over here. And the bizarre thing about these candle spikes is sometimes they do get attacked and challenged. So I'm kind of very interested in that, and which would mean maybe a second unit up in that area.
Wait, where are those highs from? On the left.
So this is literally from 4 o'clock in the morning here. So. This is a European session kind of boost that we have here. And I'll kind of just draw my crosshairs to the top of that candle. And I really like that to kind of attract price action right now. So I'm hoping, one, and then the top of the value area is my core position, right? It's where that dark blue histogram bar meets the light blue. And just to remind everybody, this is just one standard deviation of daily volume. That's all the dark blue is. But these kind of areas of transition are really important to me.
All right, so we have a setup on the long side. No trade, no active trade, but a setup for a trade in the S&P 500 futures. Let's run through other markets here, because we've got Bitcoin doing Bitcoin things. We have crude doing.
Okay. I got you. Yeah. All right. So before we go to the day, let's go to just real quickly. Let's just kind of check out. Bitcoin has been nothing but I don't know what to make. I don't know what to make of it. You know, we have a gap, right? Because remember, the Bitcoin trades all weekend, right?
Yeah.
And the futures are off for a day and a half. So we had this big gap down here right now, and we're kind of. Feel like it's a little uncertain on the futures contract right now. We did have buyers finally come back up. Let me kind of make this candle a little bit easier to see today, and we're kind of stabilizing here. The interesting thing was my trend line. You know, this trend line here now, you know, oftentimes we see this, you know, support becomes resistance and resistance becomes support. So we'll see how we trade along this trend line going forward in the next couple of days to come up with kind of are we going to fill the gap here? A lot of people are big fans of gap fills. I'm not such a big fan, but we'll see what happens with that. This is an interesting market right now.
Okay. Yeah. So the trend line is kind of all you've got. You got to hang your hat on that for the moment, right?
I think so for
Yeah.
sure. And this is one of those markets where, you know, most of the futures and markets have some kind of underlying either a commodity like crude oil or gold or some kind of benchmark, but long-term established benchmark like the S&P 500. Here it's like we're brand new, man. This is the Wild West, and anything can go. But I'm going to stick to my charting.
All right, and then we'll run through a couple more, and then we'll just spend the remainder of the half hour here doing a deep dive and answering questions from you and going deeper on what Jim is seeing here. So let's run through. There was, I think we didn't look at oil yet. We didn't look at gold yet. Do you want to? Do you care?
Yeah, crude oil this is awesome, Mark. I mean, this is a lot of fun from a charting point of view. If you're into charts, you know, we had a double top that formed, as you can see up here in my on the chart. And then we have, you know, the OPEC and, you know, the OPEC plus folks meeting to kind of get involved, right? So prices are pretty high, right? They were in the 80s. Then the 22nd meeting popped in here right now. And then not surprising, you know, the prices rallied after that meeting, right? Of course, they want strong oil prices to feed their engine over there.
Yeah.
Omicron Friday happened here. Huge price, right? Everyone's freaked out. We're not going to travel anymore. You know, jet fuel. No one's going to want it. This is very negative from pricing. Things kind of slowed down. And then the 23rd meeting, emergency meeting of the OPEC and non-OPEC ministerial meeting popped in, and they basically said, hey, we're going to continue to pump more oil in January, but we're going to keep to the course. We want these prices to be in the $60 ranges and not lower than that. And then finally, I took this quote from John Kemp this morning. I follow him on Twitter at JKemp Energy. It's a hedge funds and other money managers sold an equivalent of 131 million barrels in the 6 most important petroleum futures and options contracts in the week of November 30th. And that's that week of that big price dislocation that we saw there. So that makes sense a little bit here. I think we're going to stabilize sideways at this point and be trading exactly where we're at right now.
I don't know if you can answer this, but what are the most important futures contracts? Would that mean like, is there a hierarchy of the months?
So important meaning, so I don't know. It just depends on the asset class, really. I mean, if you're an interest rate trader, you're going to look at the 30-year Treasury bond, which I just showed right now. If you're a yield curve trader, you're going to look at that versus the 10-year futures. So that would be kind of what's your specialty, what's your interest in. But from a customer point of view and from the people that I talk to a lot, it's the stock index futures. Then it's the crude oil is next. And then believe it or not, gold is very popular also. And I'll just pop up a gold chart right now to take a look at my surprise that Omicron Friday didn't really do anything to gold.
Okay, so Jim, since our last show, I said off the top, a lot has changed, right? We've seen a noted pickup in volatility in the last couple of weeks, and some weakness in growth, some relative strength in value, as we just looked at the Dow Jones compared to the S&P or the Nasdaq today, for example. So how are you trading this period where it's definitely not all out panic, right? Definitely not. Let's keep some perspective here. But if you can compare today, compare this week to the same period a month ago, 2 months ago, things are a little bit more dicey. So how are you trading this market now compared to a month ago?
Yeah, so if take a look at the micro E-mini S&P chart I just pulled up, and I'm logged into simulated live mode with a real-time data feed on the NinjaTrader trading platform, and so we just got our first unit filled, right? So we just got our first unit filled at 42.25 and a half, and I think the theme has to be, go a little smaller and give yourself more room, be more patient. We put this order in what we were 15 handles away at the time we started talking, and it kind of gravitated back, and sure enough, we were patient and we had some science behind our fill, and now we got our first unit, and maybe we'll get our second unit, and hopefully we'll go back up on our merry way. So I think the key with this little paradigm shift is slow your roll. Micros are great. There's plenty of upside on the micros, and be patient.
If I'm reading this chart correctly, did you just get fill at the very low tick of this candle?
Yes, sir.
All right.
Which doesn't always, I mean, you know how it goes, Spencer. It doesn't always,
All right.
doesn't always happen. Because remember, when you look at the price book, it's got you're in line, right, behind other contracts that are there before you, right? That's how it works at the CME group. So, and I am also in sim mode, so it's a little bit different. But
Sure.
yeah, so we found a nice spot, blind squirrel gets an acorn every once in a while. And then we're off. So, the other things we would do here is we would, put a stop loss in and a profit target in and all that stuff.
Well, yeah. Let's do that right now because now you have now you have a position now. So let's plan our way out of this thing.
Okay, so from a stop loss point of view, I'm going to look at a couple things. I'm going to look at where's the point of control, and is it reasonable for the market to get there? And I'm going to say yes, it is reasonable. So I don't, again, I want to give myself some breath. So if I go
real fast for the newer listeners, point of control.
this is just the price where the most volume has traded throughout the session.
Okay.
That's all it is. It's not. There's no magic mathematical formula. It's just the longest histogram bar in my volume profile here. Just saying, hey, buyers and sellers like this.
Can you show us how you got that on your platform?
Yeah, so I just added it as an indicator. So that's with the NinjaTrader platform, we have this thing called order flow volume profile that you could add to your platform, and you can customize it, and you could do different things with it. The most important takeaway for those folks who are following with the volume profile is I have my histogram height set at 4 ticks. So each histogram bar is 4 ticks high, which equals 1 point. Does that make sense? And then when you if you want to drill in to see the volume, you can, and it moves in real time. You could see that 5,700, 5,000, it's accumulating, and the histogram bar is going to get longer as volume accumulates, right? And you can see it in real time. And as the market trades at a given price, those things get bigger.
Got it. Okay, so point of control is where you would put some. In this case, you think it is reasonable that we can get there today in the S&P 500 future. So that would be what, a buy order, because that's lower than we are now, right?
Well, so right now I'm going to be happy with two units, right? If we get down to the point of control, that means that this second unit, the second limit order I've already sent, will get filled, right?
Okay.
So we'll have two. So I'm looking at the point of control from a stop point of view.
Okay.
But also, if I go back 1 to 2 different candles, the previous 2 candles from that are below the point of control, these wicks are kind of in my way right now. So I want to be south of the risk of the wick of these 2 previous wicks, the ones that are right below that point of control, just because of the volatility we've had has been crazy, right? So I'm just going to right click and I'm going to add what's called a sell stop. And then I'll make sure it's a 2 contract sell stop. And now I've got protection on the downside, right? And the strategy I'm really hoping for is, hey, I'd like to be successful on 1 unit and then move my stop to break even on the second unit and hope we get a runner. So in other words, let's just go ahead and throw a profit target in here. And what I'm going to use is this competing point of control. You see this big volume bar up here?
Sure.
So it's at 81 and 3/4. I'm going to put a limit order in there to sell a contract, right? This will be a profit target for one of the units, right? For the unit that we're in right now. If we get filled before we get our second buy unit, then I'm going to cancel the rest of the trade and just chalk it up to a lucky good trade idea. If we get our second unit before we get the target, then I would still want to get my target, but then I'm going to move my stop for my remaining unit back to 66 1/4.
Okay.
Did I say that too fast? Does that make sense?
No, I don't think he said it too fast. I think it must make sense. The bottom line here is if you look at the screen, we've got profit target on the upside, and we've got some stop losses on the downside, and that's basically it.
Yeah, and that's the anatomy of every trade you ever see, right? You got a position, you got a target, you got a stop. Sometimes it's a multi-target, and again, the risk-reward ratio might look a little out of whack right now, but again, the strategy is moving the stop to break even once we get one unit, and then hopefully we'll get a runner.
Okay, so that was a walkthrough in how Jim is approaching the S&P 500 futures today. Jim, what I'm wondering is, are you looking at all of these charts in a vacuum, or will you say, okay, for example, it's a better day today for the Dow than and the Russell than it is for the S&P and for the Nasdaq, and as such, I'm going to do X, Y, and Z, as opposed to if it were vice versa, and it was a better day for growth and a better day for the Nasdaq than the Dow and the Russell. Do you compare them against each other, or do you look at them all just on their own merits?
So I compare them against each other, right? And I have a bunch of charts on sides of my other monitors you can't see right now, and I'm glancing at the quote bar also. So I have a lot of muscle memory with respect to the relationship of the prices, and I picked out the S&P right now just because I think it has the most potential across all the different stock indices in the small amount of time that we have together.
Okay.
So if it was, I'm doing this all day, I'm here early in the morning, and I'm looking for trade ideas, then I would literally look at each single one and decide, all right, is this a good opportunity or is this a bad opportunity, or do I want to be patient? So, for instance, I wouldn't probably go long in the Nasdaq right now. I'm not interested in that.
So there's nothing that the Nasdaq could do, right? Well, that's not true. But the odds of the Nasdaq doing something that you would like right now are not good.
Yeah, or it would be the opposite, right?
Yeah.
So not, maybe we would be interested in going short, which I probably would be interested in going short the micro Nasdaq. So it would be a little bit counterintuitive because the two stock index futures are marching and not marching to the same drummer. But that happens a lot, right? And this is a good example of, hey, there's the point of control. This might be a good place to try to sell a contract, as an example. So I would do that kind of analysis on several of the markets and try to figure out what would be a good opportunity. And then lastly, with this increased volatility, it's okay to say, I'm not, I'm a little concerned. I'm bullish. I'm bearish here. So I'm just gonna put I wouldn't call it a Hail Mary, limit order, but I would say I'm gonna be super conservative. If we get up here, I think I would like to be short up here, and I think we're gonna gravitate back down to the point of control. Like, chances of me getting filled maybe aren't as strong, but I don't care that much if I don't.
Okay. All right, we got about 6 minutes left here. I do want to leave time for questions, and I want to let Jim get to his tip of the day. Jim, should we get there right now?
Let's do the tip of the week. Yeah.
Let's do the tip of the week right now. Tip of the day, tip of the week. What do we got?
Okay, so mainly it's this. It's extraordinary volatility we've seen since last Friday. That may continue for a little while. Again, as more and more science comes in and governments start to, react to the new strain of COVID, things should kind of settle down, number one. Number two, the market's going to really kind of start grasping this idea of tapering sooner, and then maybe an interest rate hike sooner than originally might have been targeted at the last FOMC meeting, even though they gave themselves wiggle room to do what they're doing now. So extraordinary volatility. The tip is trade smaller, Take advantage of the CME Group's micro futures product suite. In whatever market you're trading, there's pretty much a micro in it, and allow for more breadth between profit targets and stop losses. So you can give yourself some more breathing room with the micros, because the relative risk to the classic size contracts is less.
But aside from the size of the contracts, are there other differences between the micros and the regulars?
Not, I mean, the pricing is the same, right? All right. By the way, we got our target. Sorry to just co-opt that comment,
No,
but
that's right.
so now we took one off the table, right? And we never got our second unit. So we're flat in essence. We don't have a position anymore. But the first target was successful. So instead of waiting for this target right now, what I'm going to do is I'm going to just cancel these orders,
Mm-hmm.
and then take a deep breath, and then kind of reset, and then look for a second opportunity. To answer your question, though, Spencer. Oh,
Wait,
go
hold on,
ahead.
but real fast.
Yeah.
Did you end up buying, just because now that it's off the screen here? Did you end up buying the very low of that big green bar, or was it before that?
Well, no, remember we were long, right? So then we ended up here, the trades up here. So
Oh,
we
right.
ended up
Okay.
actually selling, the 8150s, which is right about where we're at right now.
And but
Uh,
you bought the 72 though. Was my
yeah, 7250. So it was
okay,
about a
got
nine
it.
handle
Okay.
winner, right? And then the two previous, this is a trade I made earlier today as
Okay.
I was practicing my trade ideas and thinking about what's going on. In any event, yeah, so that's what happened there, and which is okay. If you got one successful unit, no unsuccessful units, then take a deep breath and take your time and come up with another trade idea.
Okay, so back to my question though. The micros versus the regulars. Obviously, the micros are smaller in size,
Hmm.
and not typically as liquid. But are there other differences, or are they the same aside from that?
Well, all right, here, let's pull up an MES. Now, the opposite is true for the Nasdaq, right? Remember, the MES, the Nasdaq is more liquid in 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 the micros. But what I'm going to do is I'm going to pull up two trading ladders. On the right hand side is the classic E-mini S&P, or the bigger one. On the left hand side is the micro E-mini S&P, or the smaller one. And you can see the prices are 100% correlated,
Yeah.
right?
Yeah.
And even if there's a nanosecond where they're different, they come in line right away. That's kind of number one. Number two, if you look at the bid-ask spread, I just froze the micros. They're one tick. They're tight, almost always, not always, but they're very tight. It's a tight market with a tight bid-ask spread, and then the bids are in the double digits, and the offers are in the double digits, all the way up to 10 ticks up and 10 ticks down for our level 2 view.
Sure.
Let's do the same thing on the classic. Again, a little bit deeper, a little bit more volume. I'm just kind of visualizing it
Yeah.
in my head. And bid-ask spread is still very, very tight. So those are the two things you want to look at: is what's the bid-ask spread, how tight is it, and then what's the volume. And the volume has been pretty darn good. If I could just show one more page real fast, Spencer. This is the from the CME Group, just showing the last, I don't know, month and a half of volume, and you could see again,
Wow. Wow.
yeah, yeah. I mean,
Wow.
Omicron Friday started things rolling here, so we're doing millions of contracts now in in the stock index complex. So to answer your question, just keep an eye on the bid-ask spreads, the difference between the bid-ask spreads and the micros and the classics, and and if it's liquid enough for you, then consider using the micros if you have a micro-related strategy.
Interesting that so basically each of these is one day. So the last 4 days or so, basically last week, have been very elevated. I didn't realize the volume had gone up that much. Interesting.
Yeah, it's been it's for traders. I think it's a good thing. I think it adds risk to your trade, but it also adds opportunity to your trade. So it's always good to see these things moving.
Wow. All right. It is 10:59. I want to leave some time for questions. If you have any questions for Jim about futures, about the futures market, drop it in the chat. Max is asking, will there be micro options? I don't, Max, are you referring to like the options market? Because that would be a whole different kind of market than what we're talking about right now. Um, but you can always just buy one option contract, Max. But to answer your question, that's not what That's a whole different market, Max. I think if I understood your question correctly, that's nothing to do with the futures market right now, which is what we're talking about here. What else did I see here? There are other. Oh yeah, there's one. What exactly are you trading? I assume he's referring to the S&P 500, but let's just apply this to that question. What exactly are you trading when trading the S&P 500 futures, Jim?
So you're okay. So the S&P 500 futures contract is just it's a futures contract as opposed to an equity contract. In other words, you don't own anything, right? You're establishing a position, and almost all traders do it on a short-term basis. You're establishing a position which you're going to liquidate at a different price later, but you're not taking equity ownership, or you're not borrowing money if you're trading on margins or anything like that. This is just based on you fund an account and you want to take advantage of price movement in the underlying security, which in this case is the S&P 500 index, right? Widely followed. As a matter of fact, pre-market in the morning, you turn on Bloomberg and your regular or Reuters or whatever you look at in the morning. This is the market that's quoted because it's traded all night long.
Okay, I can't explain it any better. So I hope Born to be free to answer the question because I can't do a better job of explaining that.
Well, and if I could just add,
Yeah,
Spencer, that think of it as the futures equivalent of of the SPY
yeah,
ETF,
yeah,
right? And,
yeah.
and so
Sure.
there's a lot of benefits we don't have time to go into, but
If you are trading for income, Jim, what indexes do you trade the most?
well, it depends on your point of view. So the futures markets are you could very much position trade um, and hold longer term positions, right? There's no dividend payout, but there's the ability to day trade, swing trade, or position trade. And there's all sorts of entities that do just that. They develop a diversified portfolio, a little bit of the equities, a little bit of the interest rate products, maybe a couple of commodities in there to diversify. And so it's very common. There's money managers that specialize in this. Most of the folks I interact with though are day trading, and they want to try to exploit the price differences within the same day.
Awesome. Yeah, I wasn't sure if the implication from the question was that if there were dividend, but there is no dividend involved here. It's not.
Yeah, no, exactly not. So one and that's kind of that whole equation is reflected into price also, just so you know. But
Sure.
as an example, if you think interest rates over the next 2 years are going to go up, and that the treasuries are inversely related, you could sell a 30-year treasury bond in the futures market and hold it for a long period of time in anticipation that that price is going to go down as yields go up. So that would be a strategy.
Dean asked if there are options on the micro Nasdaq futures. I don't actually know if there are. I don't think there are.
That's a great question. It's not on my radar screen. The options on futures are not on my radar screen right now. So my guess is knowing the
Oh yes,
CME's.
yes, they are, but they're new. They are,
Yeah,
but they only. I just looked at it. They only opened up like last year or this year. So there are, but it's just very new.
yeah.
All right. Jim Cagnina is the guy who joins us every single Monday to talk futures. He is the senior education and training specialist for the NinjaTrader platform. Jim, tell the people where they can learn more from you.
So we do a Tuesday, Wednesday, Thursday live trade setup event every those 3 mornings at 10 o'clock. If you go to that platform training URL, ninjatrader.com/platform training, I think it is. It has the full. Oh, there you go on the bottom of the ticker there. It has the full schedule of all of the events that we have. They're all free. Anybody can come anytime they want, and we love having folks come in and also give us their opinion and tell us what they think.
All right, Jim, we will talk to you again next Monday. I hope things are just as volatile because it makes things more fun, frankly. Right? So volatility equals fun and equals excitement and equals opportunity for traders. So, guys, if you're watching, drop us a like. We'd appreciate that. Jim, thank you so much for joining us. as always, and we'll have you back again next week.
Sounds great. Thank you, Spencer, so much. You have a great week.
All right. Guys, going to take a quick break here. Benzinga Live is set to start in around 25 minutes at 11:30 a.m. Eastern Time, so stay tuned for that. I'll see you guys over there. In the meantime, hit the like button, stay green, and stay filled, I guess.